Hi, I'm Brien Lundin, and I'm here on the Gold Newsletter YouTube channel. Before we get into our interview right now, please like and subscribe this channel so you can see more of these wonderful interviews that we have. We have great junior mining companies. We have one great junior mining company here. We have Alexandra Sherron, who is the CEO of Empress Royalty Corp. Alex, let's set the foundation, set the stage for everybody right now. First off, tell us about Empress Royalty, the business model, and let's get past the shares outstanding, market cap structure, and stuff like that.
Okay, thank you, Brian. It's great to be back talking with you. It's been a while. So Empress Royalty, we are a royalty and streaming creation company. So we invest into companies, mining companies, helping either get into production or expand upon their production capacity. As a result of that, we take either a royalty or a stream, and so we're getting either a percentage of revenue from them, or we're getting able to buy metals at a discounted price, which is what a streaming agreement is. Yeah. And in terms of our company, we're listed on the TSXV under the symbol EMPR, and on the OTCQX under the symbol EMPYF. Our market cap, we've got 118 million shares outstanding, and our market cap is about $31 million US at the moment.
Great, wonderful foundation to go a little further here. Now, you said royalty creation. What I tell people when they're looking at royalty companies is you need a couple of things. You need to be close to cash flow as possible for those royalties, and you need some differentiating factor, something that's going to separate that royalty company from the pack. Tell us where and how, if you qualify under those two criteria.
Yeah, at Empress, because we are, the whole team has a structured finance background. So we really are mining finance experts. So we're investing into companies that are already in production, helping them expand or very close to production, because revenue is our key focus. We want to be able to create enough revenue in Empress to be able to redeploy and even further grow the portfolio. And that really does also make us stand apart. There's different types of royalty companies and streaming companies. You've got the prospect generators, early stage, inexpensive to acquire, but there's a long lead time to revenue generation if in fact it does become a mine. And there's a whole bunch of groups buying existing third-party royalties. It's a simple signing of a document, it's about a 20-pager, 30, whatever it is, but they don't have a direct relationship with the company. They can't renegotiate that contract and structure
And they're competing with other royalty companies for those royalties.
Absolutely, yeah. The investment banking groups are calling, a couple times a month with different proposals, and it's very much part of a competing bid process. We're on the creation side. And we're able to, with these direct relationships, we've got monthly reporting, we have bi-weekly calls, really able to monitor our investments. But almost more importantly, in the beginning, we're able to do really extensive due diligence. We go to site, we hire third-party engineers to look at their whole mine plans and all of that. So we go through a very rigorous process. And I think the other thing that really makes us stand out from the other groups is our relationship with Endeavor Financial.
Yeah, that's a bit of a force multiplier for you, isn't it?
It really allows us to punch above our weight. So, my background as I'm ex-PwC, I joined Endeavor Financial as an analyst. It's one of the world's leading investment banking firms, been around for 30 years, specifically in mining finance. I became, an analyst there, became director of structured finance in London, was involved in over 1.5 billion of deals. I teamed up with the managing director of Endeavor Financial, being David Rhodes, to launch Empress. What we were seeing is the streaming companies were providing this financing solution to bigger companies. They were doing $100 million plus investments, and no one was providing that streaming finance solution to the junior companies. That's how we set up Empress, which was,
What range would you be in then?
So we're sub 25 million is where we're mandated. Right now in Evolution of Growth, we've been doing sort of 5 to 10 million. And now as the revenue is starting to come in from those investments, we're going to start sort of increasing that size and get closer to the 15, 20 range. We've got 4 producing assets right now that are generating revenue, and that I think really does make us quite different. It's not about quantity, it's about quality assets.
And at this point in your evolution, I think there are 2 key points that I've heard you present on that I want to cover right now. One being your revenue coming in that you have forecast coming in over the next few years compared to your market cap, and your valuation compared to other royalty companies at this stage.
Yeah, so we're trading at 50% net asset value at a discount. The portfolio net asset value is about $54 million, and that's using pretty conservative prices at $1,900 gold and $22 silver. So obviously a lot more upside on that. We look at the revenue coming in from those 4 investments. If we did nothing else, it's about $60 million US in revenue coming in over the next 5 years.
Okay.
And then when you look at our peer comparison, we are trading, at the P/NAV ratio, we're at about a 50% discount compared to our peers. So it really is that opportunity now as we're growing it out. And we're trading at such a discount.
Why do you think there is that discount, and how would you eliminate it?
Yeah, obviously working very hard at that. We launched this company, as I was saying, 3.5 years ago when we took it public, with the concept that there was this demand for this financing solution and we could get great returns as a result of it. That revenue is just starting to come in now. We've doubled revenue every year for the last 2 years. That will increase again this year. That's what we're expecting to do again. So I think as the financials start to come out and people seeing that we had a strategy and we're delivering it on now, we're delivering on it now, and that starts to prove out, that'll be good. I think the other bit of a disconnect there is that we are the only pure precious metals royalty and streaming company. So we're only gold and silver. And I think as people really see that our revenue is directly coming from gold and silver, that revaluation in the stock should hopefully happen as well.
Yeah, and the deals that you've done are going to bring in near-term revenue, and it's a good portfolio. I know that you've been focused on expanding that portfolio.
Yeah.
Can you go into kind of the history of where you are? I know you can't go into much detail, obviously, although I'd love for you to. I don't think you're going to allow yourself to. But also that due diligence process and how you bring that force multiplier of Endeavor Financial into the game.
Yeah, so with Endeavor Financial, I've got access to all the financial modelers, mining engineers, geologists, investment bankers. So this allows me not to only be able to source opportunities, be able to quickly vet them, do the extensive due diligence, and then execute. And when I say extensive due diligence, we did a desktop review initially within the team. If we can agree on terms, then we hire a third-party engineering group to go into the technical review, go to site, they do a full analysis of everything that's happening with the mine plan they want to do. And in some cases, when the producer's a bit easier because we've got the operating reports we're looking back on and how that capital we spent. Over the last 2 years, we've rejected 6 deals. And they haven't stacked up to our technical due diligence process. But if they do and they vet it out and we believe in them, obviously we're working with management teams we know, and that's the other advantage we have with our large network with Endeavor and our management and board. But if they work out, then they advance to the legal due diligence, tax review, and then they get into the documentation phase. So it's an extensive amount of work that goes into these. Yeah,
and I know that you're constantly working and constantly have deals in the pipeline that may not reach the end of the pipeline. When you do a deal, let's talk a bit about the difference in the structure of that kind of a deal where you're contracted with a company, where you've custom built a financing package with either royalty and or streaming for that company, as opposed to what we were talking about earlier, where other royalty companies are bidding on an existing royalty and an existing NSR that might underlie a property and the like. What advantages do you have? I can think of one in terms of security, securing the financing, but let's go into that a little bit.
Yeah, so when we put terms out on these deals and we see we evaluate how much money they need, we then go through and look at their full mine plan, their corporate plan, to understand how much a stream or royalty the project and the company can take. If you're buying an existing one, it doesn't matter, you're buying it.
Yeah.
But we want and we need the company to be successful for us to be successful.
Yeah.
So that's part of it, is working out that fine balance of how much the project can hold in the stream or a royalty, without us being greedy, and they need to work. When you're talking about structuring, and again, we're structured finance background, there's lots of things we can tinker within the contract to fit around their current needs and also their long-term goals, whether there's a step down, but in all cases, we're taking security over the assets. So either we're taking first ranking security, or if we're sort of further down the stack, there's some debt in there, we'll have something else. For example, one of the deals we did, we were second ranking security. So we had one of our directors go on the board of that company to help that project move forward.
So in effect, in some cases, you have a call on the mine itself if you don't get your royalty payments. That would seem to be, in some cases, almost a preferred outcome. I mean, you don't want to run a mine, obviously.
Don't want to run a mine. No.
But it gives you it puts you in a good position to ensure your royalty and the cash flow keeps flowing.
It does, and ensure their agreements upheld and everything else. I mean, that is part of the key, and that's why we like that structured finance approach to this.
Yeah.
And that we can, work the certain milestones they have to hit, or certain covenants. So it's not as restrictive as bank debt. And again, we work with, and it's very bespoke of what we're doing to work with that particular company and their own restrictions or their goals, but it is very structured.
Now, obviously the market is looking for your next deals and looking forward and valuing the deals you have right now. And as you argue, most likely undervaluing those deals significantly. Let's talk a little bit about the deals that you didn't get done and the whys, and if other companies other royalties subsequently took those deals.
That's a great question. I can sort of give one example where we had exclusivity in a transaction. We had agreed the term sheet. We did extensive due diligence on it. David Lang is our technical advisor. He's had over 30 plus years of experience. He was the CEO of Endeavour Mining, of Equinox at one point. So he runs our technical DD side. And when we looked through it and the mine plan, we felt that the mine plan wasn't going to work. So we went back to them with various things we had identified and said, okay, this isn't going to work for us. And they said, well, why not? And we explained why and said, we hope you most success. And they said, well, we're going to change some things. So they went through and spent 3 or 4 months updating their mine plan. They came back to us with it, and it was a decent mine plan. But the economics had shifted in the what they needed, and so it couldn't sustain the amount of stream we wanted to put on it for them to be still successful. So we've reduced that amount, and we're still having some light discussions with them. But it's finding that balance in them of what they can handle, what they need.
It seems to me they're getting a good deal there just by talking with you and your team, a lot of free consultation, as it were.
Yeah, and because these are investments we're making for the long term, and we have such a close relationship with them, we need them to be successful. We want to be involved. We care, and we've got such a vast experience with the team, with our board, to be able to really add value, and that's part of what drives all of us.
So if we look at catalysts to close this out, we have a rising gold price environment. We have a net asset value for the company that's based on far lower metals prices than we have today. We have the advantages of a royalty streaming company, which outperforms typically the rest of the sector in a rising price environment, especially. Undervalued, priced net asset value relative to your peers, ready to show the market money, that cash flow that we would think it would not be able to ignore. Am I missing anything here?
Yeah, probably the thing that I spend most of my time on is building the portfolio out.
Right. So new deals coming down?
New deals coming down. We've got a couple term sheets out at the moment. We'll see how they check out through the due diligence.
Right.
But we really want to create more diversity in the portfolio, bringing in similar assets to we've done before. We're looking in South America, Africa. We're looking actually a couple right now in Asia.
And by similar assets, gold, silver, near-term cash flow.
Exactly. The ones we're all looking at the moment, of the 3 that they're most advanced, 2 of them in production, one's in development stage, but it's 6 months from being in production. So it is absolutely cash flow focused.
Well, sounds exciting. Alex, great to be with you here. We haven't talked for a while. Good to have you back. Thank you so much for bringing us up to speed on Empress Royalty Corp. Thank you.
Thank you so much, Brien.